Hey guys, what's up? This is Francisco with Valerizo Capital, and today we're gonna do the market update video. In this video, we're gonna go through the indexes. We're probably just gonna take a look at QQQ because the SPY, Nasdaq Composite, DIA, and IWM basically look the same. We're also gonna go through a very important chart, which is the UBXY, which I consider one of the most important charts to analyze right here in the market. That way you can get a really nice insight of what the market is trying to tell us. And then we're also going to go through Apple and Tesla to analyze what is actually happening with the two mega caps that have been holding up the best. And then we're going to take a look at some of the leadership. I say quote unquote leadership because they are already breaking down, and they are actually setting up for some really nice short setups. So remember guys that this video is for informational purposes only, and that everything is based on my personal opinion and is not financial advice. So now that we got that out of the way, let's start here with the charts. First, let's start here with the chart which I consider to be the most important one, and that is UBXY. Why do I consider UBXY to be the most important chart? I usually have found that UBXY tends to set up before the market moves. Why do I think that? What is my thesis behind it? Is because UBXY is a hedging instrument, and since it is a hedging instrument, I have found that people tend to hedge before anything major happens, and I have seen that a lot of patterns develop in the UBXY, and then we can see some pretty strong moves in the Nasdaq Composite and the other indexes. So right now, what I'm seeing in the UBXY is actually pretty simple. If you have been following the channel, you are familiar with the indicators that I use. And the indicators that I use, let me just show them really quickly for you. I have the trend oscillator, which is the indicator in the middle, developed by Sam Shames in order for me to find the momentum structure in any stock. Then I have the TTM squeeze, which also helps me find and identify momentums in time when a stock is squeezing, meaning that the Bollinger Bands are trading inside the Kellner channels, and there's a high probability for us to see a pretty nice directional move to either side, and then we use momentum to identify the probability of the move. And then the one that I have right here, these dots, these are basically to identify the structure in terms of moving averages. So this one uses the 8 exponential, 13 exponential, and 21 exponential. And basically when I have green dots, that means that the structure in the moving averages is bullish. So those are the indicators that I use. I keep my candles white because I only care about structure, momentum, and trend. I don't care if we have a down move or an up move. I do look at volume, but is not one of the main factors behind my trading. I always focus on trend. That's the most important one for me. And then I just use the structure. So all the lines that you just see here, these are basically just automated points where I can see pivots, and those pivots are based on minor highs and minor lows, which is a pretty easy pattern, a pretty easy candlestick pattern, and that way I can identify a structure in price as well. So what I'm seeing here in UBXY, let's start here with the video. What I'm seeing here in UBXY is that yes, we broke down below this 11.20 level, but I actually consider this to be an accumulation phase. Why do I consider it to be an accumulation phase? First of all, it didn't break down completely, and second of all, we're back above it. So that's why I consider that to be an accumulation phase. And then you can see clearly here that the momentum is above 50, meaning that we are above that line, which is telling me that the momentum has more probability of a continuation to the upside. We can also see right here that the squeeze is firing to the upside as well, and you can see that the structure in the moving averages is bullish. You can see right here that we actually retested that 11.20 level. We hold it, and now we're starting to move to the upside. So my expectation in UBXY, I consider UBXY to be one of the most important charts here. And my expectation in UBXY is that probably we're going to continue to chop a little bit, but my expectation is that we're actually going to see a pretty strong move to the upside. Now, how high is going to go? No one knows, right? How high something is going to go. But if we just look at some of the past moves in the UBXY, we can see that the 200, which is the pink line in my chart, you can see that the 200 has been acted as resistance multiple times, and the 200 is somewhere around 14 right now. The question is that 200 daily gonna act as resistance again and we're gonna get rejected and then the market is gonna continue to the upside? I actually don't think so this time. Why? Because we have this squeeze that is firing. We have a pretty nice bullish setup. And I think that we might actually probably test at least these highs right here, right? I think that we're probably gonna run somewhere around 16, somewhere around 18. Of course, we have to take it day by day, but that's what this is actually setting up to. So be aware of this chart as long as we continue, and the level that I'm gonna give you, because the purpose of this channel is to give you levels. The level right here is 11.21. If we continue to trade above 11.21, just accept that the path of least resistance in the UVXY continues to be to the upside, and that we're probably gonna see more pressure to the downside in the indexes, given that this is looking pretty bullish. And now let's just take a look at the QQQ. And the QQQ is really interesting here because the QQQ, it looks amazing for more downside. Why do I say this? Because if you just turn the chart around, here is the QQQ just flip to the other side. This looks beautiful. This looks like a cup and handle, isn't it? Right? You can see the cup right here. You can see the handle, and I'm expecting more downside here. Right? This is an amazing chart. If this was a bullish chart, everyone will be talking about a cup and handle and that they're getting exposure, they're looking for more upside, that this is a textbook setup, and it looks exactly that way, but to the downside. And you can see right here that we respected that 21 exponential, and that we're also trading above that 285.62 structure. So let me just put the chart back around. And this is looking great for more downside. You can see my indicators. You can see that you can see right here that the structure in the exponential moving averages is bearish. You can see that the squeeze is trading below zero. You can see that we're also trading below zero in the momentum structure, and we're trading below 285.62. So the level that I'm going to give you is going to be 285.62. If we continue to trend below that level, I'm expecting more downside. And if we actually break back below these June lows, I think we're going to see some acceleration in that downside. So there's nothing bullish about this chart. We might turn around, who knows, but there is nothing right now that is telling me that the market wants to turn higher. If you are playing this long, I don't think that you're respecting risk, and then you're just basically trading on your opinions, because right now price is telling us that they wants to continue to the downside. Now let's take a quick look at Apple, AAPL. And the reason that I always take a look at Apple is because Apple is such a high weighted stock in the market that I consider it to be the most important stock in the market. And what we're seeing right now is kind of the same, right? You can see that the momentum structure is bearish. You can see that the structure in the moving averages is bearish. You can see that the momentum structure is bearish. You can see that we have a squeeze that is firing to the downside. And then most importantly, what I find pretty interesting in momentum is that we continue to make lower highs. And as long as we continue to make lower highs, I don't see a reason to think that Apple is just going to turn around. Maybe the Fed pivots, who knows, but I'm not seeing that right now, and I only follow price because price tells the story. And the level that I'm going to give you here in Apple is going to be 148.37. As long as Apple continues to trade below 148.37, I think that we just have to accept that the path of least resistance continues to be to the downside. You can see that we had a kind of a bounce into that declining 8 exponential, and that offered a beautiful place to short. My expectation is that Apple is going to retest these lows somewhere around 130. So that's what I'm looking for Apple. And then we can take a look at Tesla. And it's funny because Tesla and Apple were the stocks that were holding up the best, and now they're basically just trading to the downside, right? So you can see this. You can see that my indicators right on action right here. You can see that I got the sell signal on this candle right here. Why did I got the sell signal? Because we had a break in momentum. You can see that momentum went back below that 50 line. You can see that we had a divergence in momentum going lower, price going high. That's always a flag in that indicator. And you can see right here that the momentum in the moving averages is bearish, momentum structure is bearish, squeeze is bearish, and you can see that the price structure is bearish. So as long as we continue to trend to trade below 270.31, we're just gonna continue to move to the downside. We just have to follow price. And my expectation is that Tesla is gonna come all the way back here to the lows, which is somewhere around 210. It is extended right now. You can see that we have a gap between that 8 and price. So I wouldn't be surprised if we bounce, but I think that if we happen to bounce to that 8 exponential, I think that's going to be an amazing opportunity to get some shorts into Tesla and look for more downside. And then I just want to show you some of the leading stocks, right? Quote unquote leading stocks that we had. One is the MPH. You can see pretty clear head and shoulders pattern right here. We are already breaking below the neckline. And what I love here of my indicators is that you can see, right? You can see a lot of divergences here, right? You can see the price was moving higher, momentum was moving lower in both of my indicators. Now you can see that we got confirmation with that break below the 50, with that break below in momentum structure, and you can see that the squeeze is firing to the downside. Usually when the squeeze fires, we see somewhere around 5 to 8 momentum bars, meaning that we're going to have 8 days where the momentum is going to be pretty extended to the downside. And my expectation is that we're at least going to fill this gap right here that we had on earnings. There's nothing bullish about this chart, right? If you want to take EMPH for the long side, we have to recover structure, and that's above 294.80. So nothing bullish about this chart. There's nothing wrong with it. You just have to accept that the right path right now for this chart is to the downside. Then the other one I want to show you, CLH. And you can see that Celsius, this one was pretty textbook as well. You can see the price waited for the 50 to catch up with it. You can see the head and shoulders here. You can see that we broke below the neckline. We now have a beautiful bear flag below the 8, below the 13, below the 21, based on the structure of the moving averages. And then you can also see that the structure in momentum is below it. You can see that we are already finding resistance in momentum around these levels, which is great. And then you can see right here that we are starting to see this squeeze firing to the downside. I don't see why CLH is not going to test that 200 daily below it. I think that's the path of least resistance, and I will continue to see that trading to the downside as the place to go. And then the other name that I want to share with you is Swab, which was also a leader, quote unquote leader, because this one already broke down as well. I have an active sell signal here. And this one, kind of the same story, right? Kind of the same story, kind of a head and shoulders here, or you can say that the shoulder is right here. And what I really find interesting here, and here's where my indicators shine. When we get these breaks in momentum, this is a considerable break. You can see that we broke below this 50 line here. When we get a considerable break, I will get this sell signal right here. And the moment I get this sell signal, I look at the last resistance level in momentum. And when I see this kind of short covering rally going higher, 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 I don't care where price stops. I care where momentum stops. And you can see that momentum stopped right here. And that ended up being one of the greatest places to short. And you can see that swap is down 4.44 on Friday, and now we're below that 50 line. And we have a squeeze. Momentum is getting rejected. We have bearish momentum structure in the moving averages. Swap to 220, I don't see why not, right? So this one is looking pretty bearish as well. And I think that kind of summarizes my analysis. Market is looking bearish. There's nothing wrong with the market looking bearish. The only thing that you have to understand is that you have to, since we are traders, we have the flexibility to join the path of least resistance. And the path of least resistance right now, based on price, continues to be to the downside. And we can take a look at the put call ratio really quickly. And yes, the put call ratio is pretty elevated. The way that I see it, I use a 10-day moving average. You can see that the 10-day moving average is above 1, meaning that there's a lot of bearishment in the market. However, we are in a bear market, right? I have found that important lows based on the put call ratio happened when we are in corrections, because a correction is just a stopping point in a bull market. And when we get a lot of fear in that correction, then the bull market continues. But when we are in a bear market, and we have been in a bear market for over a year, then whoever is shorting, whoever is buying the puts is right. It's the same thing when the market is bullish. When the market is bullish, whoever is buying those calls is right as well. And a lot of people is like, oh, there's a lot of complacency in the market. This is not gonna end right, and then we end up having like a 1 year complete rally or something like that. And that tends to happen right now. And a lot of people are like, oh, there's so many people that are bearish, but they're right, because the path of least resistance continue to be to the downside. So be really careful in just thinking that the market is going to turn because we have a lot of bearish sentiment. Sometimes when we are in the last leg, and this is something that I have learned from my mentors, is that when we are entering into the last leg of the bear market, we tend to see a huge spike, huge spike in the bearish sentiment. And that doesn't mean that the market is going to turn. It usually accelerates to the downside. So we have to be really aware of that. I think if you just follow price, you're going to be fine. If you just follow price, you're going to be fine. Keep your emotions away. Keep that analysis, that macro analysis of analysts out of the way. Just follow price. If something is below the 50, if something is below the 50 DMA, the path of least resistance is to the downside. Just keep it that way, and you're gonna be fine. So thank you so much, guys, for watching this video. I'm sure that it's gonna be helpful for you, that you're gonna be able to use this to implement this analysis into your own analysis, and that way you can make better decisions in the market. So thank you so much, guys, for watching. Remember to like and subscribe so that more people can find my channel and use this information. And also remember to follow me on Twitter at Valareso Capital. And in my Twitter, I share daily information of the markets. I share charts, setups, and also my thoughts and some ideas on trading psychology as well. So thank you so much, guys, and see you. Bye bye. Peace.